Cathie, I'm so happy to meet you finally. I've been following you for a long time, I have to say, and here you are in UK.
In the UK. I'm really excited to be here, Monty, because I know that you know what we do and are excited by it and want to share it with your viewers. So thrilled.
Amazing. You know what? I was trying to think when did I start following you? And it was a long time ago. One thing that really impressed me at the time was well, first I in Italy I speak with everyone in the financial industry, funds, investors, and so on, and basically are 95% men. So I've never seen a woman talking in Italy about investments, you know. And of course there are, but it is a very male dominated sector, let's say that. And so I was impressed by the fact that, oh, okay, it's a woman talking about investment. But the most important thing was that you were very transparent. So ARK Invest was very transparent about, you know, what you do and your research and the thinking process behind. And usually when I watch interviews to investors, they're always, you know, you don't know exactly why, what. So it's a bit like behind the scenes. So that was really interesting. And of course, you have a great way of communicating, easy to understand. So it was really impressive. And I thought that was the thing that started to burn my interest in your work.
Thank you, Monty. One of the reasons I founded ARC in 2014 was not only to focus exclusively on disruptive innovation. I didn't think there was enough research being done on it, given how much is happening, but also to open up a research ecosystem that would be very collaborative, like open source software, just open source research. So give our research away, not when it's finished, because it's never finished, but as it's evolving so that we can collaborate with those who are heads down innovating. They're very interested in our work because we're sizing the markets they're going after. And that's not what they do. They're just going after it. So it's been a win-win because they are helping to battle test our assumptions in research. And they're on the ground out there doing the work. So we are dealing with exponential growth opportunities. If you make an incorrect assumption, or if we make an incorrect assumption early on in an exponential growth opportunity, it's probably going to be a big mistake. So we want as many people to battle test our ideas. And believe me, we get all kinds of people talking about our ideas. You know, some love what we're doing, others hate what we're doing. We just take it all in and just make sure that you know, we're being true to ourselves and examining every potential outcome.
Got it. Let's do a step back because I was curious to understand how did you suddenly, because for me it was suddenly, because I never saw you, and then boom, I saw Cathie Wood, everyone talking about you, and it was like impressive growth, also in popularity. How did you make it happen? And what's your background, first of all, before starting ARK Invest, just to have a little bit more context about you?
Sure. Well, I came through the traditional asset management world. I started at Capital Group
Right.
on the West Coast in the US. Capital Group, I know here is known as Capital International, I think, and migrated. I was in New York City for really 40 years
Right.
and worked 18 years at Jennison Associates, where our chief investment officer, Sig Sigalis at the time, he knew Mr. Hewlett and Mr. Packard. He knew Gordon Moore. He knew all of the great technology inventors of our age or of that age. And there, along with my father's inspiration, he was a design engineer for radar systems at the dawn of the electronic
Wow.
age. And so, you know, that kind of influence gave me the inspiration to go for it in a way. Technology levels the playing field and really can transform the world. So I became inspired. And when we went through the tech and telecom bust and then the 0809 meltdown, we saw an accelerated shift towards benchmark style investing or passive investing. And in my world, there's not much difference.
Right.
And we saw a move away from real research on the new technologies that are evolving And the irony here is the seeds for what were planted, for what is happening now, were planted in the 20 years that ended in the tech and telecom bubble and bust, and that turned a lot of people off. There's a lot of muscle memory there, but those seeds have been germinating and now they're flourishing. We are ready for prime time for a lot of new technologies, and investors are scared to death. It's the opposite reaction of the tech and telecom bubble, which makes me feel good. It means we're onto something. In terms of how we happened upon the scene, I have an economics background as well as technology focus. Art Laffer, I don't know if you know the name, Laffer curve is his famous curve about taxation. He introduced me to Capital Group, big inspiration in my life. And I feel I need a good understanding of the backdrop in which we're investing. And so we always have a point of view on the economy. When COVID hit, I saw the fear, the palpable fear. Investors, everybody was afraid we were going into a depression, a global depression. Our wealth would disintegrate and so forth. And we had a different point of view. And I started doing YouTube videos then weekly because that's how much we felt we needed to reassure clients. And I said, wait a minute, right now we have more fiscal and monetary policy stimulus thrown at one problem than we've ever had, even more than 0809. And I said, people are at home. What are they going to do? They're going online to shop. This is going to be a V-shaped recovery, and it's going to result in inventory shortages because all of the producers shut down too. And so that began the YouTube journey. Now we're doing that. It's called In the Know, once a month. But we got so much feedback. Thank you. I would have sold everything if you hadn't been on saying, don't do that. The markets are going to recover. So that's how I think we started. And then the other thing that happened is we boomed in 2020. Innovation solves problems. That was another mantra on that YouTube video. Innovation solves problems. And boy, did we have spectacular returns in 2020. But as we exited 20 and into 21, when everybody thought we could do no wrong, when everyone was looking at our trades because we post our trades every day, trying to figure out what we were doing or maybe what they should buy for their own personal accounts, I was saying, wait a minute, keep some powder dry. This is not the real world. Whenever I've been in a situation where I can do nothing wrong, according to other people, trouble's about to hit. And it hit royally in 21 and 22. And I said to my team, and all of them were going out with, they're technology specialists, each of the analysts and sector generalists. And they were going out and talking about their technologies. And then the bear market hit. And I said, okay, I've got this one. I've been through a few of these. Let me take the slings and arrows. And we know the discussion's just going to be about economics and multiples and the market broadly. So I'll do this. And I think that's a lot of people paid attention to that as well. And we were not right. It took much longer for the supply chain issues to resolve, especially because of the Russian invasion of Ukraine. And so the inflation that we call induced by a supply shock lasted longer. But now it's coming down, and that has been our call for quite some time. And we think it's going to come down much more dramatically in the future, ending in deflation, because these new technologies are inherently deflationary.
How do you deal, Cathie, with the pressure when you bet on new technologies? I'm 51 years old now, so I'm in technology for a long time. I'm passionate about it, but also, with the right, let's say, critical thinking about it, so that technology has to be useful for us and so on. And what I notice is that it's incredible how sometimes you spot something new. I remember the internet, when it started, I was going in Italy doing a tour saying, hey guys, there is the internet, will be a great opportunity for people. And it took, 15 years. And the first years, I remember people in Italy treated me like, who is this idiot? I mean, he's an idiot, or social media, I started to do video on social media. And people say, you are done, you are like, why do you do videos on Facebook? I mean, this is not professional. And so it always takes a lot of time. Bitcoin is another example. Every time I talk about Bitcoin, I get a lot of insults and haters, and people say, "Well, why you're you're selling a scam?" I don't sell anything. I mean, just talking about. So how do you deal with that? Because it's different. When you have my money, I invest with you, and then I see that Bitcoin is not really up, and I say, Cathie, what's going on? Are we sure about it? And so how do you deal with that?
Yes. So, our research is centered on something called Wright's Law. Wright's Law is a relative of Moore's Law, and it gives us a sense of how quickly the costs associated with each technology are going to fall. And then we have to assess, as those costs drop, who else is going to want to access this technology? Battery costs are a great example. I think most people underestimated how quickly EVs were going to take over, and they are now in the process of taking over. We did not, because we saw that especially Tesla was riding down a technology cost curve that was well advanced. It was the cylindrical batteries that are used in laptops and cell phones. All of the other auto manufacturers thought this market is 10 to 15 years away because they were using completely different batteries, lithium ion pouch. And so we were able, and believe me, we faced a lot of
I
criticism,
imagine.
but that cost curve kept us focused. And it wasn't changing. The story was getting better. And so we just kept pounding the drum. And anyone who listened to us on Tesla in 2014, when we started the firm, and stuck with it, and many people did listen to us, they were captivated by Tesla itself. And some actually had an experience in a Tesla car. So gradually people were coming on, but the traditional market, traditional asset managers, they would have nothing of it. Why? It was not in index funds.
Okay.
And if it wasn't in an index fund, they didn't need to follow it. They didn't need to research. To give you a sense of how crazy this is, the S&P 500 did not put Tesla in its benchmark, the S&P 500, until Tesla crossed $500 billion in market cap. There are not many companies bigger than that, right? And we think that problem is going to get worse because the technologies around which we have centered our research and Wright's Law, so robotics, energy storage, artificial intelligence, blockchain technology, and multi-omic sequencing. Those are the 5 major platforms, and they involve 14 different technologies. They're all moving even faster than EVs did. So the courage of our conviction is born out of our research, and we can follow that cost curve decline. And as long as it stays in place, we know that within a 5-year time frame, which is our investment time horizon, that these technologies are going to take off. And you mentioned the internet, the early days. I remember that very well as well. But people were saying, "What is this?" And investors were saying they weren't so benchmark sensitive at the time, but they were thinking, "Okay, I have to invest in the hardware, the routers, the switches, what's a header?" And, I was doing that too. Like, what is this? When the real answer was you needed to focus on the apps that were going to ride on top of this standard, which was free. That's an inspiration also for our open source ecosystem. We want other people to build upon our research. We give not only our research away, but when we feel that a company's model is misunderstood, like Tesla's, we publish that model. You can find it on our website at arc-invest.com or on GitHub, and you can see our assumptions, and you actually can change them. If you think we're crazy on an assumption, change that variable. I think there are 41 variables you can change in our Tesla model.
Right.
And see what price comes out.
Oh, that's really interesting because it gives the idea that it's not one arbitrary choice that you say, all right, I believe that, my gut instinct or, the algorithm said, but there is a research behind. I also remember, I think there was an early interview with Elon. And by the way, Elon said multiple times, if you want to check a good research, check ARK Invest, which I think is a great a testimonial. I mean, I don't know how much traffic that brings.
Oh my gosh, that was unbelievable. And I think what has happened, he sees that we have a long-term time horizon. Most investors do not. They're looking at today's, this quarter, next quarter, multiple today, and we're looking at the exponential growth opportunities, especially around autonomous. Very few people are doing any work on autonomous. We have done a ton of work on autonomous. And I think we do have the best research around it, mostly because we're toiling at it every day and working with those who are out there innovating. He respects that. And with the funny story there is that when we were just starting out, we only had 15 million under management. We're approaching 25 billion now. But back then, we would call investor relations, and investor relations knew us from my prior life. But because we were so small, we were sort of at the back of the pack all of a sudden. One day, we got a call from Tesla's business development department. This was a beautiful call. We were still waiting for our call from investor relations. Biz Dev calls and says, "We'd like to talk with you about your model. We'd like to know where you get these assumptions." And that was a real dialogue, talking the same language. There was nothing like getting that call when we were so small in terms of assets, in terms of encouraging us to continue this line of research.
That's amazing. And then one day, just Elon called and say, "Cathie, let's have a chat. I think it's a good."
No, what happened there, and I'll never forget the day in our office, I was in a meeting that I couldn't get out of. And then I heard this whoops and screaming, and the whole office lit up. And I thought, okay, something either went really right or really wrong. What the heck? But I couldn't get out of the meeting. And what had happened is Elon, because we push our research out on Twitter, and of course, now that's X, and we know how important X has been to the evolution of Tesla. Elon liked a piece of research that Tasha Keeney put out, probably on autonomous way back then. This was 2019. It was February of 2019. He liked it, and he said something complimentary, and the whole office just went crazy. And he followed her. And he followed me and Sam Corris, who's her partner, and Brett Winton, who's now our and he's followed us over different, and the office just lit up. Talk about proof of concept. Giving research away and getting feedback like that was just proof of concept like no other. And what was so interesting about that, I said, Tasha, when I found out what it was, I said, ask him if he'll do a podcast with us. And so she did. He got right back, and we were in Fremont the next week doing that.
That's
podcast.
Amazing. I remember that. I think was amazing. Yeah. Also because, as you said, I mean, it was not like Ray Dalio, I don't know, going to talk with Elon Musk. So it was really interesting and technical, like a conversation about principles and the technology. And so it was very, very different.
And just if I can say, we learned a lot about the person Elon Musk during that time. I think he is he has obviously very high standards. He's a very tough boss and taskmaster, but he is a good person. He is a really good person. And, a lot of people think that he might be arrogant. I don't think so at all. When he respects people, he will say to them, as he said to us then, he said, look, the most important thing you can do for me, when we thanked him for doing the interview, is, if you see that we are making a mistake somehow in terms of our go-to-market or whatever, tell us. We will listen to you. We will listen to the feedback. And that he means it, because he monitors Twitter, and certainly in the early days he did, to see what might be going wrong with his cars. So he's a good person, and obviously brilliant and thoughtful.
Very interesting. So EV is happening. Another topic that you've been talking about and researching a lot is Bitcoin. Help me to understand, first of all, Cathie, why SEC is not approving yet any Bitcoin ETF. There is a waiting list now. There is ARK, there is BlackRock. There are a lot of players. Everyone waiting, and no one understands. I just saw the other day Gensler there grilled the Congress saying, man, just do something, But so what's happening there?
We have met the research people at the SEC, the Bitcoin and crypto research people. They know what they're talking about. They are really smart. The head of FinHub, who reports to Chairman Gensler, is really smart. She's a scientist by background and just really understands what blockchain technology, Bitcoin is all about. So I think he's got great research. I think this is Gary Gensler. Personally, I think it's been political. Rumor has it, he would like to be Treasury Secretary. What does the Treasury look over? What is its mandate? One of its most important mandates is the sanctity of the US dollar. So could it be, that he would prefer a central bank currency as opposed to Bitcoin? That has gone through our minds. But when the SEC approved a Bitcoin futures ETF, which actually has counterparty risk, a Bitcoin spot ETF would have no counterparty risk. Ours, for example, would be backed by Bitcoin in cold storage at Coinbase. No counterparty risk there. Bitcoin futures ETF? What? That's why the SEC lost the grayscale case. So I think this is more about Gary Gensler.
Got it.
And maybe his political ambitions. But I think the judicial branch of our government, the legislative branch of our government, is in our checks and balances system. That's what makes America great in a way. It often puts us in gridlock, but there are checks and balances. And he really is appointed by the executive branch, and these other two branches are now weighing in. And he is beginning to call the Bitcoin ETF his personal Vietnam, which means it's a problem that he needs to get out of it. I think he's now even backed away and said, well, I'm not the only decision maker here.
Right.
There are 5 of us. And so forth. So we think there's movement on the way and that it will happen.
Do you think that, I think the deadline now is probably January 2024. Do you think that if they are approved, they will be approved all together, or first in, first approved? What do you think?
I think they'll approve a number at the same time, because the history of ETFs is the ETF that gets there first will have the most liquidity and will gather most of the assets. Even in the gold example, the second one in line, I think its fee structure is half still the first one, and it has not been able to gain traction. Nothing like the GLD. I think the SEC, they'd be picking a winner if they picked just one. It's going to end up being a marketing war, if I might say, or battle. Of course, we're hoping, I don't know if you know this, but 21 Shares is our partner. 21 Shares is based in Switzerland. It is the largest crypto ETP provider in the world, more than $1 billion in AUM. So its infrastructure and regulatory network are fantastic. We're leveraging off of those. They're leveraging off of our research, active management, and our brand, certainly in the United States. We hope that our research, which we started, our first Bitcoin paper was in 2015. And the question was, can it serve as the 3 roles of money? And we did that in collaboration with Art Laffer, who is so excited about Bitcoin.
Right.
83 years old, a monetary scholar. And he said to me back then, when we wrote that paper with him, he said, I've been waiting for this since the US closed the gold window, since monetary policy became unhinged. This is what I've been waiting for, a rules-based monetary system. And this is global, it's digital, it's private, no human intervention. This is amazing. So he thinks that it is the first sign that we could be going back to a time pre-Fed, so pre-1913, of private money. Private money's competing against one another. And he thinks that will bring real discipline into the system, back into the system, and will represent a leap for freedom from some of the, he would suggest, hostile monetary policies that have taken the dollar down by 98% since the Fed started.
Got it. When I talk about Bitcoin and crypto in general with my fellow Italians, I have to say that 2023, well, October 2023, still vast majority of people believe that is a scam, a Ponzi scheme, not an asset, there is no value behind. I mean, but even very, very smart people that I interview, very important people, and I always think, wow, how is that possible? Is the perception changed in US? Because, Italy maybe is a small country and, information arrives later, the awareness arrives later. What's the perception at the moment in US when you say Bitcoin?
I think it's going to be an election year issue. There are real proponents, and then there are those who are saying, stay away from this. This will take away the US dollar's role as the reserve currency of the world. So you have that battle going on. You have younger people really supportive. You have people like me with an economics background, really even more important, much more important, like Art Laffer out there now starting to evangelize for this. As I said, Art is 83. He's seen a lot of economic history, and he's a student of economic history. We're going to have a Bitcoin brainstorm with him, I think, in a few weeks. And what he wants to do to help people like the ones you're talking about, to help bring them along, is he, as an economist, and as I'm going to say, as somewhat new to the topic, he is going to try and poke holes, the holes that all of the people you're talking to who are not quite on board or not at all on board. He wants to help them understand the cryptography behind it. And he wants to help them understand, and these 5 words, or each one of them is very important. It is the first global, very important, digital, private, no government oversight, rules-based, that's probably the most important one, monetary system in history. This is a very big idea. And if we are right, and our $25 trillion estimate for all of crypto by 2030 is correct, we think that Bitcoin will account for more than half of that. Right now, Bitcoin is roughly $500 billion in market cap. So 12.5 trillion plus by 2030. Our confidence there is growing, especially now that institutional acceptance is beginning. When BlackRock struck a deal with Coinbase, that woke a lot of institutional investors. And I will say kudos to Cambridge Associates, an institutional research organization. It, in 2018, said to institutions, look, you may not like this thing called Bitcoin, but you better have a good explanation for why you don't like it, because we believe it is the first asset in a new asset class.
Right. That's really interesting. Obviously, I'm a believer. I try to think about the exceptions or the critics, but the truth is that now with the Bitcoin ETF, with that what Michael Saylor said the other day, yeah, basically Bitcoin will be plugged into the Wall Street pipes, basically. So you'll have the possibility to invest, and at the moment it's not fiscal change, FASB, the new way to account from a fiscal point of view. If you have to put Bitcoin in your P&L at the moment, is not easy. So there are so many changes that go in that direction. Yeah.
Interestingly, Michael, when he first started putting Bitcoin on his balance sheet, I tweeted, I said, okay, he better go check in with the SEC because he does not want to be regulated like an investment company. And he actually, this is the power of social media. He DM'd me right away and he said, okay, let's talk. He actually did go to the SEC and worked through the SEC into its accounting. I think this is what happened, into its accounting department, who then contacted FASB, the Accounting Standards Board. And that's how that all happened. I think it's wonderful. He did a great service for the community.
Got it. Do you have an updated Bitcoin price prediction, or nothing changed? Because every day there are different news, and people change. You say, oh, maybe more, maybe less.
Yeah, well, there are two events that have happened in the last year that we think are important. Many people think that FTX was a disaster for all things crypto. It was a disaster for the people who were in those funds and on that exchange. The SEC should have protected them with a Bitcoin ETF in the US. But it actually proved the concept. Why did it fail? It was completely centralized, completely opaque, non-transparent, and completely fraudulent. But nobody knew. Bitcoin is the opposite. It's completely transparent, pseudonymous by IP address, but you can see everything going on in that network. And it is completely decentralized. So no throat to choke, no centralized source of power. It is actually a flight to safety vehicle. Now, how do we know that? The second thing that happened was during our regional bank crisis here in the United States in March. Regional banks were plummeting. The stock prices were plummeting. A number of them went out of business. And what happened to Bitcoin? It went from 19,000 to 30,000 while that was taking place. Why? The regional bank crisis brought to life once again the counterparty risk that exists in the banking system. Bitcoin does not have that counterparty risk. Again, it's a completely transparent network. We can see when a big whale is going down and is being forced to sell on the Bitcoin network. And we knew during the Terra Luna fiasco that some hedge funds were in trouble.
Yeah.
And in fact, they satisfied margin calls on crypto before they did anything in the physical world. So really two important proofs of concept.
How do they impact the Bitcoin price prediction?
Yes, so back to the price. So in our Big Ideas 2023, which is on our website, you will see the building blocks for price, our base case and our bull case and our bear case for Bitcoin. The base case is between $600,000 and $650,000. We're at about $27,000 now. And that includes 2.5% of corporate treasuries putting 2.5% of their cash into Bitcoin. It includes institutional investors allocating 2.5% of their portfolios to Bitcoin. These are very conservative assumptions. If we analyze new asset classes, historically, we've seen real estate move into pension funds. It ends up being 5 to 10%. We saw the broad category called emerging markets. They start out at 1%, they move to 5 to 10%. And we think the same will be true with Bitcoin. Now, our bull case is roughly $1.5 million.
Excuse me, Cathie, in which time horizon?
To 2030.
2030, okay.
Yes. So the $1.5 million price target assumes institutions allocate 6.5% of their portfolios to Bitcoin. How did we get there? We did it through traditional analysis, how to maximize a Sharpe ratio while minimizing volatility. Using those two as the frameworks, you get to 2.5 to 6.5%. That would help us get to 1.5 million. When you think about that, we are already at 19 million Bitcoin outstanding, and we can see the long-term holder base increasing. Every week, every day, we see it. We monitor this and we show it in our Bitcoin monthly. We only have 2 more million to go, and the institutions have not gotten started yet. So the scarcity of value, the store of value role of Bitcoin, we think will move into overdrive as institutions commit. And we think that institutions will commit more broadly after the SEC approves a Bitcoin ETF.
Got it.
Spot ETF.
Got it. Cathie, let's move into AI. It's another very, very interesting topic. By the way, in the last 2 days, I saw first the new ChatGPT features where you can upload an image and say, look, help me to fix the bike. And it starts to give you a real-time tutorial. By the way, OpenAI projected $1 billion revenues at the end of this year, raising a new round. I think the valuation is around $80 billion. So insane. I mean, it's every day. Or Meta Connect. I saw the new Meta Connect glasses with AI. I mean, is an incredible revolution that impact everywhere. What's your take on that? And what's your, again, research-based bet on the AI impact?
Yes, the reason this is happening so quickly, and this is what we're back to, indexes will not be able to catch up here until it's very late, shall we say. So AI training costs are dropping 70% per year. So when you see a cost decline of that magnitude, you're going to get more of it. Just to give you a sense of what this means. If ChatGPT, or the model that developed ChatGPT, had been developed in 2015, it would have cost $500 million. Instead, it was developed in 2020. It cost $4.5 million. Today, 3 years later, probably less than $400,000.
Wow.
That's how quickly this world is changing. So that is why you're going to see a proliferation of new products and services. Now, the question is, how do you make money on this? So OpenAI, 90 times revenues? I don't think so. I mean, they may get it. We won't participate. But what we believe is happening here is that foundation models, OpenAI is a foundation model. It is scraping all of the internet from the beginning of internet time to produce these answers. So are a lot of other companies. And so we think that is going to be a commoditized model. Sure, they charge $20 per month right now, but you've got Llama 2, which Meta Platforms put out, and it is almost as good as GPT-4. And we're seeing leapfrogging. Google's putting out, again, leapfrogging. So foundation models are not, we do not believe, where you're going to make the money. You're going to make money from companies that harness AI and evolve their own products and services. They have to have 4 characteristics. 1, deep domain expertise. When you talk about the life sciences world, we call it multiomics sequencing. So it's the sequencing of DNA, RNA, proteins, methylation. It's complicated, right? You need deep domain expertise. You need AI expertise. You have to invest in that. Sure, you can use foundation models, but you must bring AI expertise in-house as well.
Sort of vertical specialized AI.
You are so right. There are 2 more characteristics. Proprietary data. That's the critical one. Data that no one else has. And then 4th, widespread distribution. Now, there's a company, UiPath, which came out of Europe, the founder from Romania, and you used the right word, specialized models. UiPath is a robotics process automation company. It takes all administrative work and makes it much more efficient. Sold me on the story is he told us when he was doing his roadshow initially that he couldn't believe that all these large corporations around the world who know they're bloated and lots of bureaucracy, they were willing to come together and share best practices in terms of work process efficiencies, automation. They didn't consider that IP. He has all that information, and he is able to use foundation platforms out there, their own specialized models by industry in order to evolve the business. So we think it's going to be a huge stock, but nobody knows that name. They all know OpenAI. And so if you look at our portfolios, most of the names in the portfolio are there because of their positioning in the AI world. So we're very excited about it. We believe that AI is the reason that disruptive innovation broadly is going to move from $10 to $15 trillion in global equity market cap, including private equity, to $200 trillion by 2030. But it's also going to be extremely disruptive to the traditional world order. So this is why I founded ARC. Get on the right side of change, because change is coming. And before you know it, the world will not look anything like the world we're living in today.
Absolutely. The other day, Cathie, I saw this company that produce digital avatar where basically they clone you. Imagine I do my videos. I always thought, well, I am absolutely irreplaceable because it's me talking, So they clone you with $1,000. You have your digital clone, which is like 90% you. Voice cloning is
Yes.
super easy. What you
Yes.
say, the script is written by, ChatGPT 5 can say more intelligent things than me. And I thought,
Yeah.
what am I going to do? I will employ my digital avatars. I mean, what do I do? I mean, I don't know. It's interesting because you're challenged to think that you'll be disrupted in any sector.
Yeah, everyone should think that way. But if we change one word, if we change the word artificial in artificial intelligence to augmented intelligence,
Yeah.
that is the hope for human beings. You're probably going to proliferate your shows and become maybe more verticalized, each one,
Yeah.
and your avatars will take care of that. Now, of course, you want truth to win out, and you have to be very careful with these avatars because if they are controlled by these open source models, they're going to hallucinate. You've heard hallucinations coming out of, because if you think about what ChatGPT is and a lot of these chatbots, they are scraping, yes, the internet from the beginning of internet time. What does the internet contain? It contains lots of facts and figures, unbelievable. But it also contains misinformation. It contains creative writing. I mean, if a professor asks a student, first year student in astronomy, to write a history of space exploration, that student can be very lazy and will have one in 30 seconds thanks to ChatGPT. But that student will get an F. The professor will know right away because, there's all kind of science fiction on the internet, and it's going to spit out crazy stuff about space exploration that just never happened. So it's going to change education too. We're going to become reality checkers, and we're going to be doing actually more research when we see something that ChatGPT has spit out and said, wait a minute, that does not seem right given what I know. Let me do more research. So it's going to change the way we're educated. It's going to change, or educating ourselves too. And it's going to change, yes, all kinds of jobs. So it's going to be pretty exciting.
Oh, exciting. My digital avatars will have a lot of long hair, like this is my plan. Cathie, 3 more minutes and then I'll let you go. I know you're super busy. I was really curious about European arrival because until this moment, ARC was US, let's say predominantly US based. But now you have acquired a company and you arrive in Europe. So, I mean, UK is not Europe anymore, but in my head is Europe, some sort of. And what's your plan there?
What has been fascinating from the beginning of ARC is when we analyze our subscribers, now we give away our research, but when we analyze our subscriber base, 25% has come from Europe and the UK. When our marketing team looks through the questions that come our way on our website, the number one question is from Europe and the UK. Why can't we access your funds? When are you coming to Europe? So we've been looking for a partner for years. Our COO, Tom Stout, found this little gem inside of Asset Co. And same DNA as ARC. Reminds me of ARC in our early days, very hungry, scrappy. And we are still that. But we didn't find a lot of companies like that, certainly not inside larger companies. But this one, yes, and they're very focused on the future. They are agnostic in terms of benchmarks, which we love. They have a great relationship with the Central Bank of Ireland, their regulator. Half of their funds are Article 9, whereas only 1% of all the funds in Europe are Article 9. This is very important to Europe, and we're thinking innovation solves problems. Sustainability and the desire for it is going to be enabled importantly by innovation. They are focused on global megatrends, thematic. So it really, we just sitting here with them in the last few weeks, I just know we've made the right decision, and everyone is so fired up. It's so great to see that on both sides. So
that's
very
fantastic.
exciting.
Good luck for that. Before starting our chat, I was talking with a friend and I say, who are you interviewing this week? They always ask me. And I say, I have Cathie Wood today. And he say, oh, she's a rock star. So I was curious to understand as a final curiosity, how do you deal with this status? Because most of of the people that do your job, they are or unknown or, like very behind the scenes. You are like an influencer, if I see you in the street, I would ask for a selfie. I'll say, can we have a selfie? That kind of, how do you deal with that?
The rock stars are inside the firm.
Right.
There are analysts, our chief futurist. I have all kinds of humility that I am the face of their brilliant research. That's the first thing. The second thing is, as I mentioned to you before, whenever in the financial world I have felt like we could do nothing wrong, I have learned, be careful. So I accept this with a great deal of humility. The last 2 years, 21 and 22, were very difficult for our strategy. We're having a good year this year. And so I think one of the reasons that I have become well known is I was willing to be out there when we were under fire, really under fire. And there are a lot of people who we're the source of, we are clickbait for a lot of journalists. And so we know, and we hope that others know, that what you read in the papers often just is not true. And, I take a lot of lessons from Elon Musk. Elon Musk told us no publicity is bad publicity. And so, in a way, it's helped our brand. We have stood up for our research. We're a high conviction asset manager. And most importantly, we want to share with the world the way we think it's going to change and how we want to educate people, get on the right side of change. You're going to have a wonderful life. And that's what keeps me focused on our investors, but also, much more broadly, parents who are trying to steer their children. Where should we go? What should we do with, in terms of helping educate our children? Grandparents, the same thing. Students, the same thing. People in their existing careers, just read our research. Think about how this might impact your career, your life, your job. And, if you're in the way of disruption, then think about reinventing yourself, because it's going to be a lot of fun. It's going to be a lot of fun because the growth rates are going to be enormous.
Cathie, was so interesting and really inspiring. Thank you so much, and I'll see you soon.
Thank you, Monty. Thank you so much.
Bye.